In this video, I'm going to be telling you the stocks that I'm buying right now, as well as giving you an update on my position with Boohoo after their perhaps more disappointing results, and whether I have sold or continued to buy. Furthermore, we're going to be talking about the Bank of England raising interest rates, as well as looking at two comments of the week, and I think these are of particular interest to go. So first things first, the Bank of England has risen interest rates. Now we can see here that they've risen interest rates to the highest level in 13 years, aka since the large financial crisis in 2008 to do with a lot of property and obviously subprime mortgages. Well, we've now reached 1% on Thursday. So it's gone from 0.75% to now having a 1% interest rate, and it's likely to continue going higher. Now, off the top of my head, I can't remember the inflation figures. However, it says here in this article by The Independent that on their report on Thursday, they also warn the economy will go into reverse and inflation will peak at more than 10% as they blame the Ukraine war for compounding and crippling living costs, which in my opinion is absolute rubbish. Yes, it has some impact on this, but don't forget the easy monetary system that we've had during 2020 and 2021 and the billions of pounds that they've given out in furlough and government grants in terms of support, where they have flooded the economy with cash and then wondered, oh, why have we got inflation after giving out all of this money to people? Yes, sure, I was in that situation where I was furloughed for a good period of time and I wouldn't have had it any other way. I'm very grateful to have gotten money from it. However, they can't say and blame this on a war in Eastern Europe when at the end of the day it pretty much for the most part is not related to that. But then again, I'm not a chartered qualified accountant, although I am very much on my way to getting in that direction. Now, when we look at Boohoo, when you just search in Boohoo News, this gave me a good chuckle. You've got the BBC going, Boohoo hit as shoppers return more clothes than before COVID. Sorry, the beer bug, I'm not meant to say that. Caveat, 58 million euros of bonus pay of the Boohoo's Irish chief could become a crying game. But then it gets a little bit more toxic as our favourite article here from The Guardian. And there, Boohoo tumbles as reality of online clothes. Shopping hits home. And there's the Financial Times going, Boohoo's sob story with fresh sales warning. Now, I've already spoken about Boohoo. In fact, I'll leave the video at the top right. But in very, very short, their results were pretty weak. Yes, they did give a revenue forecast or guidance warning. Yes, they said it would be low single-digit figures. However, this is to very much be expected, and they are writing off a large amount of depreciation and amortization, as well as making significant capital expenditure into their distribution, and they're focusing on longer-term sales. So one of the comments of the week says, Shein is coming, and its adverts are all over the underground. It sounds like a doom mongerer here, like someone is literally, if you could imagine, you're going on the train to the underground, there's this guy covered up over here with a hood up going, Shein is coming. Maybe with a big staff as well, just going, Shein is coming. Okay, I've gone off a bit here. But the point is, it very much feels like fear-mongering. In reality, in their recent results, Boohoo had posted, let's say the 2 months to the end of February, I believe it said something that they had 15 to 17% revenue growth in that period, which is the most recent period of results that we can really work with, given that they ended in February, although we have got the next quarter after that will finish at the end of this month. Although of interest, it will be able to see, once we get that next trading update, how they are really doing at the moment, as that could be painting a more gloomier picture, and hence why they could be giving out that low single-digit revenue forecast. But at the moment, Boohoo's share price is literally priced down as if they're never going to grow again, as if they're going to stay very stagnant at this price, and realistically, I don't believe that. You've got the Financial Times joining in with this, saying, yeah, the low single digits, this really hit a lot of minds. This is the first thing people saw, when in reality, yes, the cost of sales has increased, but if they're able to cut that down in some form of measure, which I think is possible if you streamline operations, which they're focusing on instead of raising prices to combat inflation, then they likely will do fine. Yes, they only have £1.3 million of net cash on the balance sheet, but they do have access to an undrawn retained cash flow facility or credit facility, not cash flow, of £325 million, meaning they have plenty of liquidity and they're able to deal with this situation in which there is supply chain disruption. Yes, there is a greater amount of returns, but in 2020, lockdowns were there, so everyone was buying comfortable clothing and loungewear brand, where Jacob or JKR Investing mentioned this very clearly on his Boohoo stock update, and it's very much the case. It was comfy clothes. You're not really going to return it because at the end of the day, if the size is too big, well, you've got more clothing to be comfortable in. Whereas now it's very much about how you look out in public when you're going out, and therefore people are buying extra pairs of clothes, making sure the size fits them, because realistically, when you order clothes from an online company and you don't know their sizes too well, you're going to order an extra pair and return it. So yes, not only are they being hit by the shipping costs and the inbound freighting inflation, for example, but they're also seeing it on the way back. So they're also having to cover the delivery back to their facility. So not only have they refunded that, but they're also paying for the cost of that. And ultimately, I think with economies of scale, as the company gets bigger, they're able to afford this and they're able to continue offering this service. I'm not so sure if it's worthwhile that they get rid of that, because at the end of the day, it's very likely generating longer term sales, going, you know what, look, free refunds, because they're going to be ordering 4 or 5 different items. They might return 2 dresses, but keep the other 3 dresses. And at the end of the day, they're making money from it, even if their margins are decreasing in some shape or form. I'll talk a little bit more about my Boohoo position later in the video. We've also got Russia's exit with BP. So BP, and this is interesting here in the way of the language. I haven't actually looked at the accountants or the balance sheet of this, but apparently when they have they've put down a $24 billion write-down on its 19.75% stake in the Russian oil major Rosneft and 2 other joint ventures. Now, you would look at this going that BP is exiting Russia based on the title, the headline of this article. But according to this, and maybe I'm a little bit wrong here, as I said, because I'm still very much studying this and I'm no way into any depth to be of any form of accountant at the moment, but if they've only written that down, does that not make BP in a much more favourable tax position to say, you know what, look, we have now just lost this value of our positions in these companies. Therefore, whilst yes, we did make a small profit at the moment, a majority of that is losses. Therefore, we're not going to pay any tax. Furthermore, we may be looking for a tax credit. And it very much depends on whether they're actually going to be getting rid of this. Because you can see here that actually they're in a comfortable position as they are committed to buying back $2.5 billion of shares in the second quarter of 2022 after already completing $1.6 billion in the first 3 months. Now, I think that's worth investigating a little bit more though. Energy is well out of my scope of knowledge and therefore it's not something I invest in. However, I'm particularly interested in how this write-down works. Are they going to be completely removing their stake? Obviously further research is needed. Or is this a very sneaky way in which BP is able to claim advantages using the dark magic or dark arts of accountancy? The second comment of the week is, I bet you make more from YouTube versus your loss-making portfolio. Have you ever made any profit from investments? Just curious. Now, on that second point here, have I made any profit from investments? I've made some small profits from some holdings, such as Legal in General, which I think I made about a few £100, and 1 or 2 other holdings. Because when I first started this portfolio, I had about 20 odd positions, which I eventually changed my strategy over time, streamlined, and then focused very much in a core set of holdings. Now I've gone to the complete other extreme. So I've made small profits, and effectively on paper, from what I've crystallized, I have lost more overall based on my position with Argo Blockchain, in which I lost over 50%, selling at about 94 pence per share for about 4,000 odd shares, and that was an average at £1.90 or something like that. It was £1.86, something of the like, so it was very much 50% bang on, but I can't remember from the top of my head. I bet you make more from YouTube versus your loss-making portfolio. Well, why not? Let's take a look at that. So when we jump into my channel analytics, we can see my estimated revenue in the last 365 days. Now, the days bit is going to be cropped out, but you can see here from the 6th of May 2021 to the 5th of May 2022. That is 365 days, is it not? I've made an estimated revenue of £1,735. This is based off an RPM of £8.72. RPM is revenue per mil. So this is effectively how much money I get per 1,000 clicks on my content or 1,000 ad views. CPM is a higher figure because this is before YouTube takes their cut and is also based on maybe not failed, but 1,000 clicks. So therefore, I'm earning about, per 1,000 views, about £8.72. So at the moment, my views are abysmal, and you can see here in the chart how as it trends down over time, it's remained very stable, and that the lower lows have remained quite consistent, it hasn't decreased in any way, shape or form. However, if I really scale it back to the lifetime of the channel, you can see that this has very much changed. And in fact, I was earning a lot more during the end of the lockdowns, as there was a lot more people engaged and interested in this, hence why it is. Although we have seen RPM raise over time because it has become much more difficult to therefore reach these adverts to the finance niche. And I think a lot of you have become bored of this as well. The cost of living has tightened. Maybe you've got less spare money to invest with. So yes, I'm down at the moment. If we jump into my portfolio, which is here, we can see I'm down £15,266.93. That is a significant sum, or 47.72% of a decline in my portfolio. No, I have not made more from YouTube over the lifetime of the channel, as I am currently sitting in capital losses of this portfolio, which you will have noticed I have not crystallized. In fact, I've actually been buying more shares of Boohoo. You can see this as I've been lowering my average. I still have a cash position of 3%, which is £500. My bank accounts remain very liquid. In fact, I have something like £2,000 sat in cash available, but not likely to be used in my investments. And also my pension is now sitting at about £2,000-3,000 in total, as I've now moved that over and into my SIP. So next week I'm going to be making some acquisitions and adding that into my SIP, and then also commentating on that in the portfolio. Realistically, my Boohoo position, I'm going to continue buying more. In my analysis, where I really gave a stock update on the financial year of 2022 for Boohoo, I very much gave my thoughts and that I needed to avoid any form of narrative fallacy framing bias, in which I might be looking at a company that is slowly deteriorating in quality and going, yeah, you know what, but this, and actually it's still a great investment, this is why. Because it's very important in this game of investing is not to delude yourself, not to fool yourself, because at the end of the day, you've got to try and avoid being stupid. And therefore, when I looked at this investment as if it was the first time I'd ever see it again, I very much had mixed opinions. I was almost quite conflicted. And I suppose in a way it was a case of, well, based on my original investment strategy, would I have bought shares of this company, seeing their deterioration in the balance sheet and perhaps their earnings drop alongside cash flow? Or even though their revenue increases, this would therefore be a little bit more riskier than I would have initially invested in. However, I think my mindset is different because I already hold this investment. You could say, well, you're a bag holder, you're not going to cut your losses, you're too weak, you're going to hold it all the way down to the bottom. Sure, but I've also done significant research in this stock, and I believe this is an industry-wide concern, and that therefore over the longer term, this will very much balance out. Maybe it will never hit £4 a share ever again, but all it needs to hit for me to be back to flat is £1.55. If it reaches that, all of my losses have been wiped away. So I'm going to continue averaging down because I truly believe that the long-term aspects of Boohoo are strong. And I do think they will return to revenue growth. And it will be the key metric to look for in the trading updates is how well they're doing in the UK. Once they've got that Sheffield facility automated, can we see an improvement there? And then once they've built their US distribution center, is it Pennsylvania? I think I said Transylvania last time. Not what I meant indeed. Once they've built that, I would like then to see, okay, how well are they doing? Is this improving? And realistically, are we seeing growth of revenue in the US now that distribution is not restricted and that they're able to achieve 1 to 2 day delivery? Because at that point, I want to see that is where Boohoo has its advantage, and can it outcompete the likes of Shein? So that's really what I'm looking for longer term, is can the UK continue to grow in revenue? It makes up over half of Boohoo's total revenue. How well can it do? Obviously, cost of sales are increasing. Is this going to last forever? I don't think so. I think they'll be able to cut down, streamline, and I think, honestly, shipping inflation is not going to last forever, at least, but it may last for the next few years. So I think Boohoo's share price can be stagnant for a while, and I'm happy with that. If it trades in a range of 60 to 80 pence, fine by me. I will continue, but consistently top up my position. Have a fantastic day.